In a lifetime, there is a limited number of opportunities that are presented to you that, if taken advantage of, can ultimately change your life forever. Dividend investing is popular amongst investors because companies reward shareholders that hold the stock a small percentage of its profits to them. This reward is called a dividend, which is brilliant for investors looking for an extra income source. It's one of the most passive of income streams available to investors. Now, we're not going to talk to you about dividend investing like it's a new concept, but in fact, highlight the once-in-a-lifetime opportunity there is in the stock market with dividend investing. Make sure you stay until the very end so you don't miss out on the opportunity. The chance of earning an extra income perks up the ears of everyone, especially someone like Mark, who's looking for more sources of income other than his job. A few years ago, Mark had a scare when he was made redundant, while he had a baby on the way. Since then, he's got another job, but would hate to have another scare like that again. He believes having an extra income would reduce the risk of that ever happening again. Also, he was the type of guy who would always just let his money sit in a savings account, not really earning much interest. But as he approached retirement age, he began to realise that he needed to start thinking more seriously about his financial future. One day, Paul, a friend of Mark's from work, was telling him about how unfair it was that one of the richest men in the world, Warren Buffett, pays a lower percentage of tax than they do. Mark was confused until he started to research more into Warren Buffett, as he realised Buffett's major portfolio holdings contained dividend companies like Apple, Bank of America, and Coca-Cola. Additionally, Mark found out the reason Buffett was paying a lower percentage of tax than he did, and that was because dividend income is taxed lower than active income in the US. While researching Buffett, he was introduced to dividend investing. He had never heard of it before, but the idea of earning an additional income from his investments that was relatively steady sounded appealing. He started researching more about dividend investing and was impressed by the potential for steady returns even during a recession. Mark knew that a recession was looming on the horizon, based on the current macroeconomic factors being reported on the news. Macroeconomics are economic factors that affect a large scale of people. The Russian and Ukrainian conflict is an example of this because it resulted in the price of oil increasing, which affects a large scale of people financially. The fear-mongering on the news reminded him of the 2008 recession and decided that now was the perfect time to start investing in dividends. He knew that during a recession, stock prices would be low and he could buy shares at a discount. He also knew that companies that paid dividends were more likely to weather an economic downturn since they had a steady stream of income. Even if Mark's prediction of a recession doesn't happen, the markets are significantly down since last year, and believes he can still take advantage of the lower prices in the stock market. Mark now needs to research which dividend companies to invest in. He was planning on copying Warren Buffett's portfolio by investing in his major holdings as they seemed to be successful for him. However, during his research, Mark came across a Buffett interview where Buffett claimed it's best for the average investor to invest in index funds like the S&P 500. This is because most investors pick individual stocks without doing the necessary and continuous research that Buffett does for the stocks he picks, which often results in most investors losing money. Investing in index funds, which contains a basket of individual stocks, has less research involved, which is why Buffett recommends them for the average investor. Trying to find the time to research stocks while balancing his work and family life would be difficult for him to handle. Also, with Mark having no experience when it comes to investing, he believes it's probably wise to follow Buffett's advice for the average investor, despite his enthusiasm for alternative income streams. After making his mind up, he decides to follow Buffett's advice by focusing on investing in index funds, in particular, dividend ones. Mark came across several options he could park his money into, but decided to invest in VT, which is the Vanguard Total World Stock ETF, and VNQ, which is the Vanguard Real Estate Fund ETF. Let's look into what Mark is deciding to invest in. Starting off with VT, this fund invests in both international and US markets but contains over 9,000 stocks, with a current dividend yield of 2.06%. Mark wanted to diversify his risk by having a more global exposure than just solely the US. As a newbie, he wants to play it safe, rather than chase higher dividend yields, which may not be the best investment for him. Mark also invested in VNQ. This fund doesn't invest into real estate directly, but instead invests into REITs, that are the companies that invest into real estate. This fund captures the returns of REITs from the real estate sector within the stock market. Furthermore, the fund also contains over 150 REITs and has a dividend yield of 3.66%. Mark has an interest in real estate. He's looking to own real estate in the future as he searches for other income streams. As a first-time investor, he thinks it would be wise to begin investing through REITs before investing into real estate himself. If you're enjoying this video so far, then make sure you subscribe to the channel so you never miss a video. Mark began to put his money into dividend-paying stocks and was pleased to see his investments grow over time. He was able to sleep soundly at night knowing that even if the stock market took a further downturn, his dividends would continue to provide him with a steady stream of income. 18 months later, Mark experienced a recession he predicted, despite being a short one. Over that time, he invested heavily by investing $1,000 per month into his 2 index funds, while the market continued to go down. He didn't give in to the fear of the market as he accumulated by dollar cost averaging. He continued this as the market began to recover on its way back up, as it was a prime time to accumulate shares. Mark didn't cash out his dividends, but instead reinvested them to grow quicker while the price of the stocks were discounted. 20 years later, Mark was able to retire comfortably thanks to his wise investment decisions. In those years, he got in touch with a financial advisor who was able to support Mark in finding more income streams. His financial advisor was able to help Mark acquire real estate. After his kids grew up and his family life was less chaotic, he found more time to research companies. Mark then began taking on more risk with a small minority of his portfolio with individual companies. These companies included Coca-Cola, Johnson & Johnson, and Apple. These companies provided higher dividend yields than his major holdings, which were the 2 index funds. The companies boosted Mark's return for his portfolio, while still managing risk responsibly. In conclusion, he was grateful that he had taken the time to learn about dividend investing, and had taken advantage of the opportunity to start investing during a recession. At retirement, Mark was receiving $20,000 annually in dividend income. This wouldn't be enough for him to retire solely on, but with his other income streams, like his rental income from his real estate portfolio, pension, and social security, he can retire comfortably and hopefully without another financial scare again. Mark's story serves as a reminder that it's never too late to start thinking about your financial future, and that sometimes the best opportunities come during difficult times. If you're someone watching this video who's on a low income and thinking to yourself, is it even possible for someone like yourself to become rich? To even become a millionaire one day? Well, make sure you check out our next video to find out.